It is my great honor to invite to the stage Mr. Ram Gev, Deputy CEO of Bank Hapoalim, CFO, to present to us a survey about economic decision-making in the era of uncertainty. So, good morning, everyone. First, thank you, Professor Reichman and Major Lieutenant Amos Gilad, and all of you. Thank you very much for this. I'm very happy for this opportunity to join this conference and speak to you as we open this panel. It is a conference that brings together people from different disciplines, from different professions, and allows the participants contribute from the knowledge and experience in favor of the economy and society and safety. As was mentioned, for the past 3.5 years, I've been Deputy CEO of Bank Hapoalim, heading the financial division that is in charge of strategy and planning. And in these coming minutes, I want to talk to you about uncertainty. What does it mean, this uncertainty we're now experiencing? Why are we feeling it more significantly in the economy lately? And of course, how do we gain advantage regarding competition in such surrounding? And I would like to open with a question to you. Don't be shy. It's just raising a hand. So the inflation during the past year, it's a hot topic that was also mentioned in the conversation with Rubini. So the inflation during the past 12 months was 5%. So short survey, who thinks in the coming year it would stand on 4.5 to 5%? You could raise your hand now. Also, those people standing at the stairs, who thinks it will be over 6%? That's good. Who thinks it would be less than 4%? Okay, usually I also ask in other forums also who does not think. But, so the diversion here is very interesting also because the market has about 3.5% of projection or expectation, or market expectation about 3.5%, but we will immediately understand that it means nothing, or at least does not mean much. Before that, I will start with a short story. A couple of months ago, I was in London, and on the way to the airport, I took an Uber. And speaking to the driver, it was a long drive. Speaking to the driver, he told me something very interesting. He said, "You can predict nothing today, even what's behind the corner." It doesn't matter that 1 minute after that, he almost ran over a scooter rider, but the greater context was very clear. And what's more interesting is that in the IMF conference, several weeks after that, I listened to the IMF chairperson, and she said things that were very close to that. She said the ability to evaluate today what will happen in the medium and even short term has become very complex. And it's possible to say, or let's put it this way, that if we go to the lyrics written by Shmulik Aarons to a song written by Arik Lavi, he was pretty much on the spot, and the answer is in the song. You probably know about it. The quotation says, "Nothing is known, not a year, not a week." So we know the weaknesses of the projections, and we might find out that some projections are not true, but there are quite many examples that are very famous. One is this. Ken Olsen, who was the CEO of a very famous company, DC Equipment Corporation, and he said that in 1977, and we know that reality is very different than that. He didn't deny, by the way, saying that. He just said it was taken out of context. And he basically was talking about the size of a computer. And today, when we think in a long-term perspective, he was quite right. People don't want a computer at home. They want it in the palm of their hand. Anyone who was enchanted, someone who was enchanted by this, by the way, was an American-Canadian professor, Philip Tatlock, his name was, and he researched, listen to this datum, it's fascinating. In this research that was spread over 20 years, and for anyone, dealing with projections must read it, between 1984 and 2003, and what he did was he took 284 experts from every different discipline, so economists, politicians, politicians, journalists, researchers, etc. And every year he asks them some specific questions, what will happen in this field and in that field. And he, in fact, collected almost 28,000 evaluations and projections. So it's a huge amount of data regarding, future projections. And he asked a very simple question, like I asked you. What do you think will happen? Will it be the same, higher, lower, etc.? But he asked them one more thing. He asked them to tell how certain are you about your answer. And I'm not going to go deeper into it. You can go and read more about it within a group. But the group as a whole, the interesting thing was that they didn't get it more right in their projections than just a random guess. Or in my words, had I asked my 8-year-old son to give me his projections, they would probably be no less of a higher quality when it comes to results. But if we take this very broad field and look at our days, and let's go back to this whole topic of inflation that was also discussed here before, because the whole global economy is dealing with it as well as the Israeli economy, of course. So look at that. These are assessments of the British, the UK Central Bank, 2019. How will the inflation going to develop? And you can see the graph, and then what, in fact, they thought assessed how it will develop. And it's very interesting because you can see a very broad range here when it comes to that. And they did not, of course, predict COVID, but that's quite different. But there is a very big margin for mistake, error margin here, which is basically like saying we don't know when you give such range. And I think in many cases this is the right thing to do. So I think when it comes to predictions, but as I said, they couldn't, of course, predict COVID. That was 2019. But even if they would have given those assessments during COVID, probably the margin, the error margin, would have been quite significant. Yet still. And now let me share with you June 21, a year and a half into COVID, and as you know, Fed had meetings regarding the interest, and they had predictions, and the Fed members have given their own predictions. And based on those predictions that were put up on June 2021, 18 months into COVID and also into the rebound phase. And we see these predictions. Every one of these yellow dots is one of the Fed members, and you can see that their projections for the beginning 2023 or end of 2022. So the most hawkish member did not think that the interest would rise over 1.6%. And we can say that they see a lot. They have the data, they have the expert. And of course, the results are different. Regarding inflation, they evaluated it will come at this point to 2.5%. And the results, as we all know, are quite different. So 5.5, and the Fed is now 5.25, their own interests. And looking at Israel, the image is not quite different. Does anyone have any projections about what was the projection of Israel at the end of 2021 regarding the interest of 2022? About less than 0.5%, right? And today we are standing on 4.75 in inflation. Inflation drops at 5% rate. By the end of 2022, we were a bit less than that, about 3.25. The beginning of January rise, but of course the difference is quite big. And the interesting question here is regarding why is it happening? I mean, we find ourselves in, when it comes to banking and business, we are required to make these assessments, make these projections, especially about these very important things. And the question is, why does it happen? And the basis to the understanding of everything of why is it happening is this. It's understanding that, in fact, COVID was not a regular crisis. It's not like previous crises that Rubini mentioned, and that started maybe with financial instability or economic problems. So this was a health event that at one moment created a shutdown for economy, shutdown next to supply, but also next to demand. And people couldn't leave their homes, and at the same time, businesses could not open their doors. So what we have, and you can see to the left side, a halt. You can see the orange line, a very strong halt of the economy, much more than happened during the Great Recession of the 1930s. And already during the first phases, the governments and the central bank started giving support to citizens, to businesses, same as minting new money, if I can use this term freely. And what's interesting to say here is that their goal was, it's important to understand, some sort of like bridging loan that would allow people to go through the COVID with the hope that the learning process from pandemic and later on, when there will be enough time to find the vaccinations. But so what they created was this bridging loan, and then we had a very quick rise of demand, and it's absolutely fascinating. We must understand that this was not also a characteristic of a recovery from other crises, because it's not a recovery, it's a rebound. It's like a computer that I've shut down at the first second, and then when you turn it back on and you follow its matrices, once you turn it on, they all go very high, and there was a very big leap of demand here. It's based on three elements. One is economic. Pandemic, people were staying at home. The pandemic was okay. They got over it. They left home. Now they have demand. Second is psychological. People were kept at home. Now they live. They want to consume more and feel alive. And the third, which is super interesting, on the average, the volume of free income of people was increased during COVID. First, because they got the support money, and second, because they saved more money. They didn't make any expenses, and they couldn't make expenses. And third, and another one was if anyone who had real estate or financial assets, of course, that affected their sensation of wealth. And with this growth, we received a rebound that is very fast. According to Anthony Friedman, the father of monetarism school, this rise brings an inflationary effect, but in fact we've seen some more fascinating things, and that is pressure on the chain of supply, or inflation of the supply. For different reasons, when it meets great demand, it created rise of an increase of prices, and along with time, the demand and supply were regulated again, and we could see the more dangerous part of inflation, which is inflation next to demand, inflation on the wages, on the services, which is something that concerns the central banks who remember the 70s and the 80s. And here it's important in this context to say something. The rise of the interest is the most effective tool, is the only effective tool that we know in order to mitigate inflationary pressures, when we know clearly that this tool does have a price which is damaging the rise or growth or economic activity that is. And in other words, the process of mitigation of inflation is painful. It is accompanied with pain for the market, for quite many people and populations, but it's probably more probable, and it's something that we would prefer than chronic pain, or something that is a more elaborated damage to the economy over time. And the dilemma of the main banks, central banks, if we take all these balls juggled in the air, is when should we stop the rise of interest when we see those hurting the economy? But at the same time, we must understand that the data accumulated beside the difficulty of making assessments, the data is being accumulated too late. So we don't want to stop beforehand, and miss the whole effect created up to that moment. And additionally, another layer that is so interesting, and I believe we all feel that, is the work market. So COVID, in fact, created disruption to the work market, starting with early retirement of some people, and then creating new professions, the tastes of people, how they want to work, working remotely from home, which started as a business continuity and then became some kind of work culture that, for me, lowers productivity. But that's also an element. And households, one of the two spouses decided that maybe they don't need to work as well. And all of these created a new situation, additionally to the regular complexity of what will happen, because the work market, which is a very important parameter, came into this event and created new scenarios, completely new scenarios that are creating more complexity. I will not speak about other elements that got into this equation, like geopolitical situation, etc. But the complexity is very clear. And looking at the academic aspect, the economy, and every kind of discipline you will take will tell you very clearly that there are different levels of uncertainty, and you can see different formulas that show it to you partial or complete uncertainty or a very clear future. But what we recognize during the last few years that is developing and must be understood is another layer of uncertainty, which is the multi-dynamic uncertainty. So in fact, if we compare uncertainty to being in a room where the lighting is not so good and you have all these different paths, so the multi-dynamic uncertainty means that you blink, and once you reopen your eyes, you're in a different, completely different room, and or what you see around you has completely changed, which is what is now happening today. And in other words, I could say, you probably know the butterfly effect. Originally, by the way, from what I know, they actually spoke of the seagull's wing flutter, but people know the butterfly effect as the title of that. So it's become very meaningful, and economically, it's a room full of butterflies now. And so what we do with that? If you know how to behave within the uncertainty, you will have a competitive advantage. Or if you don't do so, in multi-dynamic uncertainty, in those terms, you will find yourself thrown into business directions where you don't understand why it's happening. And to us, which is something we apply, there are three critical elements to deal with that. One is the ability to recognize. You must have good sensors that even when the signal is very off or very weak, they still can understand it, and also analysis ability. And I will give an example. And the second thing is dealing with creating abilities, whether it's a company or a global economy, creating abilities. The more you try to dictate the end result, you will find yourself running into uncertainties and diversions, and you will put a lot of money into that, and you need to be able to react. And the third and very, very significant element is to be able to put your feet on the ground very quickly. Once your senses pick up on something, you understand it in a certain way. Now, it doesn't matter if it takes you a whole year to apply it, because then everything has changed again by now. So this ability to bring things quickly from insights into execution is very, very important. And I undoubtedly think that any organization to change the model of operations will have more chances of succeeding. And I can tell you that us in the Bank Hapoalim, we apply business-wise and technological-wise a whole model to apply these things, different tribes and agility, exactly in order to allow these things to happen, which is a model that is touching us on the daily life of over 2,500 employees, only in order to be able to deal with ever-changing environment, as well as the interest. You've seen that the fact that Bank Hapoalim has a great word for the mortgage owners that is very significant, because it's the fruit of being able to recognize what's important to our clients, recognizing the dynamics, and create that technologically, and then drop it into the market very quickly. And an ending note: we can't, finish without nothing, because we do talk about national and security and economy. So in this uncertainty, we also have the state of Israel, like any other state. And into our case, we also have some unique events, which makes us an idiosyncratic case. But the Israeli economy, which is something we see very, very clearly, is an asset, strategic asset of the state of Israel. It's the way I see it, it's also the Zionist a dream being brought to life, and also the basis of education and existence of a society. It's the cornerstone for all the other abilities. And it is now very, very strong economy, especially if you compare it to other countries in the world. And you see the number 2048. This is the year for 100 years for the state of Israel. We will be here, 15 million people of population. It will be very crowded, which is nothing new to all of you. One thing is clear, though: in order to celebrate on that year our achievements with an optimistic perspective, we need to keep the Israeli strong economy very strong in the future as well. Thank you very much.